You know, it happens all. So yeah, so like I was mentioning, like I'm very excited for this boot camp because every single boot camp that I've done, I've gotten better at teaching it to you guys. Because like one thing is kind of like knowing, like everything that I know it, but then kind of like explaining it to somebody and like the steps, it's like kind of hard because like to me it's like, bro, like it's obvious, you know, you're like how do you not get it? But then like it's taken me, you know, like 3-4 boot camps to understand how to explain it. So I feel like I've mastered how to make it like to the T, everything, explain it. I do it like I literally give you guys a blueprint. And if you don't follow this blueprint, you're not gonna make money. Like that's how I've learned how to do it. And it's taken me, you know, a couple months. So appreciate you, Duchess, HD, all the OG guys that, you know, took me a while to get the hang of it. But yeah, like for me, literally now, like I can almost teach it to you guys in maybe like 2.5 weeks, but that would be me rushing it. Obviously, like the goal is to go throughout the whole 30 days. So you guys see the markets. Like at the beginning of the boot camps, like I'll predict like movements for the rest of the month. And we come back at the end of the month and everything plays out like perfectly. That to me is like the ultimate flex. And like I feel like that's where like the work speaks for itself. But yeah, usually what I used to do in the beginning at the first boot camps, I would do an introduction. So everybody would come on and kind of introduce each other. But I see you guys already did a lot of introductions in the introduction section, and then the Google type form that I have now. I get to know you guys. So now I could put a face to you guys, which is kind of cool at the same time. So this way I save a lot of time. I don't basically waste a full Zoom session, just you guys getting to know each other. I'm kind of going to go like today, just kind of do like a little simple breakdown, get you guys kind of like in the motion of what we're going to have coming Mondays and Wednesdays. And then based off of today, like the energy you guys give me is how I'm going to select you guys in groups. And the groups now I'm going to give it back to you guys in your emails. So obviously I have all of you guys is like I have all of you guys is sectioned off. So based off of your guys' reply, I have it right here in one of my other screens. I just literally add, okay, this person matches with this person. And then I'll email you guys back your partners. You guys can make a text message chat, a WhatsApp chat, Telegram, whatever you guys want. This is something I highly recommend because kind of when I was coming up and learning, I was put in a chat and then I was probably like that quiet guy in the chat. And then, you know, thankfully for the other guys, like they kept pushing notification. I'm like, bro, whatever, let me give this a try. And then that's kind of what like really got me interested in it. So I feel like the chat is something that's going to make you guys not feel lonely in this journey, right? Because like, it's pretty hard to kind of meet other people in the space, kind of till I didn't meet Raul, which obviously was a great, you know, like insane person to meet. When like meeting other traders, like you don't really like see these people anywhere. Like let's say you're a nurse, and you could bump into a nurse at a grocery store, maybe with scrubs on or something, but like nobody's walking around with like a trader, like, oh, I'm a trader. Like it's like almost impossible to find that. If you guys do that, let me know. But yeah, it's very difficult. So like the fact that you guys are in here, like it's so funneled down that these are the people that are serious about this shit, right? So you guys are definitely where you guys want to be when it comes to putting yourselves in the right group. This is where you guys can, you know, have the mentality. Yeah, set and forget t-shirt. Yeah, I'm gonna have some shirts for you guys. But yeah, so I'm glad that I've gotten a lot better. You guys are gonna see everything I explain. It's gonna be just simplified as much as I can. Let me share my screen. Do you guys have any questions? You guys have anything you guys want to talk about? I have all of you guys muted because for the most part, some people kind of have their mics open. There's some background noises, and it's just better. The first boot camp that I did, no offense to like all the guys from the first one, but it was very frustrating. It was very difficult because everybody had mics open, so they would just open in the middle of like an explanation and just like mess with the momentum. But like I said, like I've learned a lot as we've gone, and you guys are gonna see it now within these 30 days. You guys have any questions? You guys have any concerns? I'm excited. I love the group setting. Yeah, the group, like putting you guys in like your own groups is gonna be game changer. When will the groups be? Okay, so I'll probably have you guys in groups, if not by tonight, by tomorrow morning. Let me do this. Like for some people. Oh yeah, this is the other thing that I wanted to kind of ask you guys. So when it comes to the Zoom sessions, like what would be best for you guys, right? Before I just want to kind of have like an idea. What would be best? Would you guys rather have kind of afternoons like this or mornings? For me, honestly, I don't care. I set off these 30 days for you guys. So whatever you guys want to do, like if it's 2 a.m, I'll be here. Like this is why I take so much time to do a boot camp, because I literally, I'm here for you guys the next 30 days. So you tell me whenever is best for you guys. The majority of the people are saying the afternoon, the evening. Is like around this time good? Is this time good for a lot of you guys? Perfect. Worst case, if if we switch it to a morning, bro, you guys like say it in the chat. Like say it in the chat, like, yo, guys, let's do morning the next day and we'll do it. Like, no big deal. Okay, perfect. Afternoon. Okay, yeah. So we'll chop it up. If anything, I'll say, all right, you guys good for 5, you guys are good for 6, and we'll go through it. So what I'm gonna basically do today, I'm just gonna give you guys a full rundown of the markets that I trade, right? So this is going to be very briefly. I'm going to kind of set a little foundation for tomorrow's Zoom. I want to collect some of your guys' question based off of my breakdowns today. This is just simple Sunday swings, as many of you may know it or may not know it. Kind of every Sunday, I come to the markets and I analyze it from other markets that I trade. You guys see my screen, right? I don't even know which one I'm showing. You guys see the charts? Okay. So I'll be like, I get this question, like, all right, how many pairs do you trade? All right. So I don't actively trade all of these pairs, right? So kind of how I explained to you guys, let me see if I can show you guys. I don't trade off of like a specific pair. I trade based off of confluences, right? So I'm just going to go to like a random month. Let's just say August 2021. And let's just click on GJ, this entry right here. So like, this is obviously like not as crazy as I have it now. Now I have it like a lot more professional or whatever. But this pair, I mean, like, as you can tell, this is like the strategy, right? But you need to understand how to properly use this strategy and understand it, right? This literally means nothing unless you have like the whole entire backend behind it. But what I'm going to teach you guys is this, and this you can literally take it to trade on anything. I do it on Bitcoin. I did it on gold the other day, as you guys may have seen. I've done it sometimes on altcoins, and it plays out because you're just trading. You're trading based off of confluences. You're not trading based off of a specific pair, a specific movement, a specific anything. It's just based off of high probability setups. I saw that Ricky earlier, he had mentioned like, oh, like what's one of the best things you guys learned from the other boot camp? And his price is gonna go up or it's gonna go down. We're just gonna learn when is it gonna go up and when is it gonna go down. And then you just go with the flow. It's really that simple. All we're gonna do is we're gonna build a roadmap. We're gonna build like a plan on when to get in. So all of those questions on how do I know it's the right time? How do I like all of those questions? You're literally gonna answer them yourselves when you go to your trading plan. It's like, oh, bro, like it's not here. Move on to the next. It's very simple, right? Like I said, a lot of these things right now are they're gonna make sense in a little bit, right? So let me pop up the chat. Do you guys have any questions? Anything so far? We're all good. All good. All right, cool. So yeah, kind of like I was mentioning, I don't trade one specific pair or all of these specific pairs. These are kind of just the pairs that over time I personally have fallen in love with. And there's actually pairs in here that during the boot camp, some of you guys analyze and then you guys bring to me. And I'm like, holy shit, like that looks clean. But I didn't actively have it on my watch list, because if you go to my full watch list, it's like all of these different pairs and I kind of have them sectioned off. Kind of the blue ones are my main ones that I just actively analyze all the time. But realistically, I'm only watching maybe 4 or 5 at a time. I'm not actively watching them. I set my alarms at my points of interest and then I trade them, right? So just to clarify everything, I don't only trade these. I could trade many more, but just if they make sense, right? So let me just get into the breakdown of these 5 trades that I've already pre-analyzed. I feel like I shouldn't have done that, but I think it's good because like it saves us time for explaining why I'm not going to look into the other pairs, right? So these are the 5 pairs that I'm interested in trading this week. When I mean interested, that means that I need a series of confluences to go down in order to take the trade. Very simple analogy. Let's say you're a real estate investor, right? It's just my simplest analogy that I've set so far. So whenever you're going to go invest into a property, you want the house to be in a gated community. You want it to be 2 floors. You want it to have a pool and a lake in the back, right? Sometimes gated community, simple, like you can like that, like you can't just make a gated community around the house. Like it just like you got to find that. A 2-story house, you could find that in and out of gated communities. And then that's 2 main base foundations that need to have. Like you can't make a 1-story house 2 floors. Like you're gonna need a gate and you're gonna need 2 stories. But then when it comes to a pool, sometimes houses don't have pools and then they can be made. So same exact little example. Sometimes if you're going to buy a trade, these timeframes can be bearish, but then they can turn bullish. So if a house doesn't have a pool, you can put a pool into it. You get me? Like, these are just minor adjustments. I think the other one I said a lake. I meant to say like a little tiki hut, like a barbecue station outside. If it doesn't come with it, you can put it, same exact thing. Some timeframes can change, right? But you know that you're looking for these 4 things. If the house doesn't have none of them, that's not your property to invest into. You simply go and you look at another real estate investment. It's really that simple. And that's why some of these houses right now just aren't ready. These houses don't have the pool, they don't have the barbecue station, or they don't have a gated community. They're just not what I'm looking for. So these are the ones that I have found right now. That is exactly what I'm looking for, right? So I'm just going to start off with, is it GJ? Let me, so actually, let me just mix them up, right? Let me just mix them up a little bit because there's a purpose of why they were the order they were, but I'm just going to mix them around a little bit, right? So let's just start off with AUDCHF. So the first thing that I do whenever I come into the markets, always start off from the top of the time frames, right? So I'll start off from monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute. If you guys don't have these time frames added, please go on here and click on this little arrow and have all of these stars favorited. So you don't have to be going back and forth. It's just visualize, memorization, that it's basically there. Another quick tip, and this is something that has helped traders in the past before, is chart hygiene. I usually save this for like tomorrow, but I just want to say it from now so you guys can have it ready from here to tomorrow. It's chart hygiene. Personally, I have my chart settings: white background, blue bodies, blue and red bodies, black on black. There's no need for a watermark. If you have a watermark like this, there's really no need for it. Like it just covers up price. I'll set some examples come next week, but if you guys can have your charts trust like this exact same setup, it'll be a lot. You guys will see the difference in your charts. Some guys like the background black. I personally think is like this is the most corporate standard way. So it's what works best for me. Because remember, like we're trading what we see. And if we can't see the charts because there's like a bunch of stuff like covering it on top of it, then what are you trading? You literally can't see it. So you got to make sure your charts are clean so you can see what you're trading, because this is based off of vision, right? So I usually start off with the monthly time frame. Monthly time frame for this example, there's really nothing here for me. But whenever I come to trade a pair, you guys need to keep in mind, yes, there's this much price, but price is right here. Like there's no reasoning on why you're putting a level of resistance here, level of support here, a level of whatever here. Like, bro, like, do you understand how far we are from here to here? Like this is huge, because you'll put so much energy and so much eye time to just marking this up when, bro, we're like 25,000 pips away from that point, right? Like you got to focus on what matters. And I personally say max 5 years. So from this point right here to where we are, maybe look back up to 5 years, right? So let's say right now we're in 2022. You want to look back maybe 2018, 2019. And that's even pushing it, because if you notice 2018, 2019, look how high we were. Like nothing irrelevant to this point. So I could even zoom in a little bit more, which is good. You don't want to have your charts too far out, because then you're literally not seeing anything. You want to zoom in. You want to focus on what matters and where price is right now. And this is exactly where price is right now. I learned that from your YouTube channel. Yeah, like that's just like the most simplest like gem that I can drop. Like if you're not looking at what matters, you're just like, that's it. Like everything after that is just a terrible chain reaction. Like I'm setting you guys the base one, like solid, like it's brick by brick, right? So this is the first brick. focus on what you're looking at, where you're looking at max 5 years, and just like get personal with this shit, you know, like just get into it, look at it, what's going on, right? So kind of like how I had mentioned before, focus on what matters. Currently, what matters is right here. Keep in mind, we are on the weekly time frame. So this is where we're going to zoom in. We do absolutely nothing right now with placing a price up here with a price on here. Yeah, these are cool, but like we're not placing take profits or stop losses or potential price movement goals. No, like where are we on the weekly time frame, right? So this is going to be lesson number 1. It's going to be market structure. We're going to go on this lesson for maybe a week or two, because it's going to take some of you guys some time to properly to identify, right? So whenever you come into the market, we all know this, the market can go up. I laugh because you guys are going to laugh at this analogy at the end. Price is going to go up or price is going to go down. But we need to understand where we are. Are we at a high in the movement up, or are we at a low on the movement down? Is this a weekly time frame, daily, 4-hour? Like, we need to understand where are we within this move. Are we peaking within this move? Are we in the middle? Are we at the beginning? I personally want to get in at the middle of this move. I don't want to get in at the last final little push to the upside, because it's where wickouts happen. You can't set and forget too much because you're reaching the end of it. Very simple example right now is GBP USD or GBP CHF. Like, guys, like, let's just zoom out for a little bit, right? We're literally at the lowest point this price has ever seen. Like, the lowest point. Price has never been lower than this. If you zoom in, you're selling at a lower low. You're in the bottom of the move. You don't want to get in here. This is not the spot. Clearly, last time we were here, price had a huge move to the upside. I want to get in here in the middle. I want to get in here, which we actually did get in here. It was easy. Break and retest, support, resistance, sell. Same thing as a buy. I'm not trying to get in at a buy when we're reaching a level of resistance. Like, I want to get in at this first original breakout to the upside. So that's what I'm going to kind of teach you guys in the next upcoming days. Where are we in the move? Are we at the top? Are we in the middle? Or are we in the beginning? Ideally, the beginning is dope because obviously you can maximize the profits, but the middle is where the shit's quick, goes to your take profit, and you're out. You don't want to be, you don't want to be the first guy, because you want, like, let's say right now a roller coaster comes out. You don't want to be that first guy to test that shit out. That shit falls, like, you're fucked, you know, like, you want a couple people to go on it, some people to move around. You want, like, you know, some heavy dudes on it, make sure shit don't break. So then you get on and then you're good. It's kind of the same thing on the middle of the move. The first move, there's a bunch of wickouts, there's a bunch of news, there's just a bunch of shit going on about to create the actual trend. So this is where you want to get in within the middle of the move, right? Obviously, then we have consolidation markets, which these, I mean, I'm not even going to waste time on it. Consolidation markets are just a no. Like, they're just like, we just don't do those. We wait for the breakout of those consolidation markets to then have to move to the downside. You're not trying to trade the range. Yes, you could buy support, sell resistance, whatever. I personally just don't want to put my money somewhere where it could be capped. Because if you're, let's say you're selling from the top of the range, I mean, let's say you're buying from the bottom of the range, you're capping your profit at the resistance. Or let's say you're selling like this, then you're capping your profits at this point right here. You don't want to do that. That's like, there's no set and forget in there. Like, you want to just have this, right? That's why I only trade trending markets. The trend is your friend. And you guys are going to see in a little bit what I mean by that. So right now, with having that minor introduction, where are we on AUD CHF, right? Magical, mysterious question. So first things first, we need to understand where are we. So this is where we're going to start off with simple market structure. Simple market structure. Let's just start from this point right here. So let's put that we have a low, lower high, lower low, market structure, whatever. And then right here, as of right now, let me see right now. I don't think this is the best example. Let me see. This is the perfect example. Yeah, because this is a little tricky. I'll get to this one in just a second. So USD CAD, right? So let's just go based off of weekly market structure. We have creating highs and lows. As you can tell, we have a high, higher low, right? So we've identified that the weekly is bullish, right? You guys can see the market structure is obviously heading to the upside. All of you guys see that? All of you guys see that? Perfect. since it's the lowest move. Yeah, Ronnie, I just saw your message. Since it's the lowest, since it's at the lowest, you move on to the next pair. Yeah, 100%. He was referring to GBP USD. All right, so first things first, trading plans, you got to write shit down, right? So, because I'm not, trust me, I will forget. Confluences, did I spell that right? Confluences to go short. First things first, weekly bearish, right? Cool. So now we know the weekly is bearish. Now we'll go down to the daily. What's the daily doing, right? So in the daily, we'll come to the daily, same exact thing, bullish structure, whatever. Higher low, right? We're bullish on the daily. Everybody can identify daily is good. All right, cool. Daily's bullish. Now let's go to the 4 hour. 4 hour, what's going on in the 4 hour? As you can tell, 4 hour was creating higher highs and higher lows, whatever. And then here it went bearish. As you can see, it went from bullish structure to now having a bearish structure. A very simple way of seeing this, I don't use trend lines at all. I'm just going to show this for this one example. You can see supposedly we're in this bullish flag or whatever. Heading to the upside, we clearly broke out of it, right? So the 4 hour is bearish. I'm going to show you guys what do I mean by it in market structure. Isn't the weekly? Oh yeah, bro, my bad. Yeah, the weekly is bullish. I'm telling you guys, bro, you guys got to help me out sometimes. All right, so weekly is bullish, 4 hour is bearish, right? So this is just, again, little minor gem for the next upcoming weeks. I'm only going to educate you guys on how to take an A+ trade setup. Like when you go to like a driving school or whenever you go anywhere, like they're going to teach you how to park the car and how to drive it between the lanes and, you know, stuff like that. After you learn how to do that, eventually, you know, you could text and drive, swerve, don't even, you know, put on your seatbelt, like do all those other crazy things. But they don't teach that at school. You learn that over time with experience, right? When you first get your car, you put your phone in your pocket, low music, 10 and 2 or whatever. Like you're driving, you're doing your thing normal. Eventually over time, you know, you thug it out one hand, like you start learning as you go, but somebody taught you the foundation and the base. So I'm only going to teach you guys the A+ setup. But I personally myself, I find it okay to take some C trades or some B trades, but that's okay. I'm going to teach you guys how to identify the trade to be a C or a B or a C trade. And this is just completely up to your risk tolerance on what you want to take. But I will only be teaching you guys how to take the A+. Over time, you guys will find yourself taking B or C trades and they work out perfectly fine, but just the risk tolerance is different, right? So I only take trades, A+ setups that have 3 time frames in sync, right? So this is just a little sneak peek again to the next upcoming weeks because I want to kind of do all the breakdowns and I want to start with the market structure. I only take trade setups that have 3 time frames in sync. And the importance of this is because each time frame is a percentage towards your grade, right? An A+ trade setup, A+ trade setup, let's just call it anywhere from, it's a 90, right? An A+ is a 90 or a 95? Let's just call it a 90%. This is Swing Trading Lab School, now whatever other school. B would be anywhere like 80% within that region. And then a C is obviously 70%, right? So the first thing, which is the first bricks, whenever you build a house, you need to, before you build the house, you need to put foundation, right? So you're literally filling up this empty piece of land with just concrete, an empty slab of concrete, and then you put your first brick. Right now, we're just filling up that slab. We're creating that slab. And the importance of this is because each one of these time frames is 10% towards your grade. So as of right now, this is going to be a 20%. 20% towards your grade. Obviously, there's a bunch of other things that come that give it the 100%. But just again, there's a little sneak peek. This is 20%. If we were to have the 4 hour bullish, let's say this were to be like this, this would go automatically to a 30%, which is what you want when taking these trades. This is the first key foundation gem whatever you guys want to call it, that I'm going to give you guys. Obviously, after this comes 2 hour, 1 hour, but it has a different strengths towards your grade. If you see that the bullish is weak, the weekly is bullish, this is bearish, and then this is just, let's just call it bullish as well. Now, this is not even a 20%. We'll call it anywhere from like 15 to like 17%, because you have higher time frame bullish, this one bearish, this one bullish. So the market's just all over the place. It's just choppy. This is just a no. Look at your foundation. The foundation is just not good. Cool. We move on to another pair. There's no need to even waste time building these confluences out, right? So if the foundation is not right, you simply move on to another one. So just like a little sneak peek to next week, because before we even get there, we got to understand, how do we identify these as bullish and bearish, which is going to be very interesting showing you guys, because it's something that nobody does it the way that I do it, right? Are we not including the monthly? You can include the monthly. I personally don't. I use the monthly more of like, kind of like, where are we in that move? Like I was saying earlier, like, are we in the middle? Are we in the beginning? But not really. I don't really use the monthly for much, because, and this would be kind of something towards like, kind of like week 3, week 4, maybe, because like the monthly is almost to me just like a wick. Like we're trading within that wick. If you notice, like if we're buying right now, let me just take everything off, right? USD CAD, we're looking for longs. We're buying within that wick. We're not going to wait for these next 18 days to be done. So if we go down to the weekly, and let's say next week, hold on, let me take all this off. Yeah, guys, I have my charts like clean, like at all times. I can't focus if it's like in the way. All right, let me just do this. All right, so let's say this has the push to the upside next week, which is just going to be 5-6 days, whatever. When you go back out to the monthly, it's just a wick. Like this candlestick is now bullish. So nothing's really happening on the monthly. To me, it's just like it's really nothing. So what's going to be very interesting now is teaching you guys how to identify all of these time frame as bullish or bearish, right? So are we good so far on this? You guys understand what's going on here? It's a very simple step one. But before we get into this right here, we got to understand, how do we know if it's bullish or bearish? How do we properly know, right? So this is what we're about to go into right now. So market goes up or it goes down, right? So let's see where you guys are in your market structure analysis. I've never taught this on YouTube. I've never done anything of this anywhere else other than my boot camps, because this is to me like the ultimate foundation setting, right? All right. Are we bullish or are we bearish in this market right here? Take your time, no rush. It's going to be fun. Okay, bullish. Okay, bullish. Okay, cool. Let me see. Let me make sure, because I don't even know. Okay, yes, we're bullish. We're bullish. Market structure is bullish, but overall, we are kind of choppy, but the market structure is bullish. So what do I mean by market structure? Market structure is every single one of these points right here. I call them elbows. They're known as elbows because it's like, you know, like an elbow. So every single place you see an elbow is considered a market structure point. I'm going to save ourselves some time just by showing you guys examples of what are not elbows, right? So very easily identifiable elbows are obviously elbow here. This is an elbow. All of these are elbows. Even this little move is an elbow. All of this is an elbow. This is just one elbow. Everything you can see that is a clean elbow. A point that would not be an elbow and can't be identifiable as one is because it's literally like you just can't see one, would be, for example, this one. We have lower low. We clearly broke above, but there's no elbow. Like there's no clean elbow on the weekly time frame. I'm sure if we go down to the daily time frame, we can see a very clean break and retest of this level of resistance here. It'll be very clean, but there's no clean elbow. You don't see any of these points as if you were to see it here, 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 here. You guys see it, right? These elbows, they're gonna trick you, man. They're gonna hit you with like some sneaky attacks that you don't even know. But if you can't properly identify it as an elbow, that's it. It literally ends right there. What the hell is that? Okay, we're up here. All right, so we identify market structure as elbows, right? Market moves in higher highs and higher lows. We know the market's creating higher highs and higher lows, right? So let's see this. Is this, we all know what higher highs and higher lows are, right? Cool. Yeah, okay, perfect. Is this, what is this point right here? Let's see if somebody gets it. Wrong. All of you guys are wrong. All of you. All right. This is not a higher low because a higher low is only created when there is a higher high. Because this right here could have easily just done this. So now that shit's not a higher low. This is a potential higher low. Because like right now, like this, would you call this a higher low right now? No, because this can easily just plummet from here and then, oh shit, it wasn't a higher low. This right now is at a potential higher low. It's at a point where we can potentially have a higher high, now making this point the higher low. Why? Because we're above round psychological, weekly, all these other confluences, right? But as of right now, this market structure right here is not a higher low. This is just simply market structure. That is a terrible X. We're not going to do those anymore. All right. So we have our level of higher high. Oh, and by the way, guys, from like, this is like mandatory. I learned this from like the last one. Whenever we're marking up higher highs and higher lows, mandatory, we do this. You guys know, like some tests, you have to mandatory use a blue pen or whatever. Mandatory, we do this because this is what's going to literally answer your own question. Like instead of asking the question, you'll be like, holy shit, like it's literally, the market's literally telling you what to do. So as you can tell right here, this is a level higher high, obviously, because we are above the last high right here. And then this is obviously a higher low because we're above the higher low. This right here, as of right now, is nothing until we don't break above the higher high or break under the higher low. This is simply market structure. So this can literally go crazy in here. It can do whatever it wants. The moment it, why is this doing that? Let me see. The moment it breaks above or under is when it's identified now as a higher high or a lower low. So let's say in this case right here, this does this. What point of these weird ones right here, whatever, let's leave it like that. Which one of these points, one, bro, hold on, let me go down to the 4. I think I know what's going on. Let me see. Okay, there it is. All right, so we've identified this as the higher high and this as the higher low. So anything that happens in between these two boxes is market structure. So let's say this does this. Creates a higher high above this point. Which level is the higher low? Is it 0.1 or 0.2? Which one of these levels is a higher low? Okay. Okay, fire. Okay, so a lot of you guys got it. So it would be 2. Why? Because it is the last structure point that pushed it out to create a higher high. So this now gets moved here, and then this now gets moved here, right? So let's keep it going. Let's keep it going. Watch, I'm about to trick you guys. So now we have market structure, whatever. What's this point right here? What is this point right here? This point right here. Okay. Okay. All right. The majority of you guys got it. Market structure, because we're within these zones. If I didn't have these zones on, it'd be very hard to see it. As you can see, you can't really tell because it looks like a lower high. But when you're looking at the market structure, you know this is a higher high and this is a higher low. So you know this is simple market structure, because this cannot just be having a retracement So then from here to have a higher high, and now this wasn't a lower high or lower low, whatever. But you wouldn't be able to identify that without these two zones here. That's why I'm telling you guys, these zones are crucial. Like this will make or break a trade because you got to know how to properly identify as bullish or bearish, right? Let's keep it going. So I don't even know where's everything at. All right, let's just leave this as the higher low. We'll leave this here. All right, so we got you guys with another trick. This is just market structure. What about this? What is this point right here? This point right here. Market structure, nothing. All right, cool. You guys are getting. All right, so now let's say this point right here does this. What is this? What is this? Is this the higher high or is this the higher high? 1 or 2? 1 or 2? 1, 2. Which one's the higher high? All right, 2. Because if I drag this line out to the right, you can tell this point did not break above this point. So it does not make this the higher high. The higher high is only once we break above the higher high previous structure point. All right, so what would be the higher low? Because without a higher high, like if we have a higher high, we have a higher low. It's literally impossible. Like it just, how can you create a push to the upside without having the higher low? So if you have a higher high, you mandatory have to have a higher low. So what would be the higher low? Would it be 0.1 or 0.2? 2, easy. All right, cool. So we'll modify this as the higher low. We'll modify this as the higher high. All right, cool. Obviously, you can tell we're in a trending market. You guys can see we're obviously heading to the upside. So what about this now? Like what happened now? What is this point? What is point number 1? And what is point number 2? Okay. Okay. Okay, okay. Fire. Okay, so this would be now changed as a lower low. And this would now be changed to a lower high, right? Same thing as we were going when heading to the upside. Anything that happens, let me make this over here. Let me go like this. Anything that happens in between these 2 points is simply market structure. The moment we break above, we now have a higher high, or the moment we break under, now we have a lower low. So let's say price does this. What is this point? What is 1 and what is 2? This is 1 and then this is 2. Market structure, fire. You guys see how easy it is to identify it because of these 2 simple lines, right? You guys are seeing how clean it is, how effective. Like now we know where we are. Where are we? We're obviously bearish. We're in the middle of the move right now. If you notice, we're not at a lower low or we're not at a lower high. We're in the middle. This is where we want to look to get in. And obviously, this is where we'll get into it later in the classes, but you'll know when to get into it because of where we are. You identify when we're bearish, and where we are currently right now in price is you're in the middle of the move. You're not at the top. You're not at the bottom. You're not at a higher high. Like you know exactly where you are simply because of market structure, right? So let's keep it going. Let's see. Trust me, I'm about to trick you guys good, bro. So now we have, what's this right here? Easy. Okay, easy. Okay, lower low. So we move this. And now where does the lower high move to? Does the lower high move to 0.1 or does it move to 0.2? Okay, fire. So we'll move this to 0.2. Okay. So now let's say we have this right here. Let's say we have what is this now? So what happens from this point up? What is point 1? Higher high, okay. So let's just make this the higher high. All right, dope. This is now the higher high. All right, so now the higher low would stay here, right? So now we would modify this to be the higher low. Or where would the higher low go? Fire. Okay, fire. Okay. So we'll move this now as the higher low. So now let's say we have price that does this. What is this point now here? Okay. This is a lower low. And does this stay as the higher high, or what goes down? Like what goes down now? Like what does this turn into? Does this turn into like, okay, the lower high? All right, bet. So this point turns into the lower high. All right, let's see this now. All right, let's do this. So now this is a higher high, right? Higher high. All right. And where does the higher low go? Does the higher low stay here, or does it move to the higher low? 0.2. Okay, fire. All right, cool. Simple. All right, cool. You guys got it. You guys are seeing it. Very simple, easy way to identify it. All right, now we do it here, right? Even easier because the market's literally drawing it out for you. So let's just go back to the beginning of everything, right? Let's just delete all of this here. We'll delete that. We'll come back to that later. All right, so let's start off with the same exact foundation. Let's identify these elbows. A lot of people kind of tend to do this. Maybe go ahead. My bad. Yeah, my bad. Do you guys have any questions? Yeah, bro. When I get on fire, I just keep going. So if you guys have any questions, just say it. Like you're like, yo, hold up. So do you guys have any questions? You guys have any concerns? Bro, this man said it. Jonathan, do you use it to the wicks or to the body? So that's exactly what I was about to teach you guys now. Onto this right here. Yeah, because it could get very confusing whether if it's to the wicks or to the body. So I literally do that at this point right now. Does anybody have any questions, any concerns? Okay. I'm going. Appreciate you guys. Okay. Simple fire. All right, cool. So let's start off here. All right, same exact thing. What's the 3 time frames that are confluence? We'll get into that in a little bit. So whenever I go to identify the charts to understand whether we are bullish or whether we are bearish, I'll start off from the weekly time frame, right? So let's just do everything again, but now understanding simple market structure, right? So let's get into it from this point right here. Obviously, I don't need to look at all this. There's literally absolutely no point for me to start doing this. Like, this is just draining for no reason. Like, we're obviously here. So this is where we're going to start. So I'll zoom into what matters. A lot of people, they like to do the line chart and then they want to do it from the line chart. I think I'm good because then this shit just throws me out of whack when I do this. Like, I want to see it from what I'm going to be trading. I'm not going to be trading this, even though it's kind of the same. I'll explain why, but I just rather do it from the bodies because you're trading based off of candlesticks. You're not trading like, how are you going to get an entry signal here? Like, there's nothing, you're going to get an entry signal here. So this is where we start off. Let's start off from this point right here. Obviously, we have a low, lower high, lower low, right? So kind of like I said, mandatory to bring out your little thingy, lower high. And we have a lower low, right? Come here, lower low. Let's make it a little bit longer because we're about to go crazy with this. Let's make this a little bit longer, right? So, well, let's leave it here for now. So notice where I put these lines at. I put these lines at the bodies. Like, these things have to be at the bodies, not the wicks. This is kind of why I was saying maybe the line chart is basically the same thing, because if you notice, those structure points are at the bodies. Like, it's basically drawn at the same exact place. If you notice, this body closure is there, If you look at it here, it's the same thing. The line closes at the bodies, but I just like doing it here so much better. So the same thing applies. We're going to drag this line out to the right because notice it's being drawn to here. Let's make this middle. Center. All right. So you guys are seeing that, right? You guys are seeing lower high, lower low. You guys are with me so far? Everything's good? All right. So kind of how we had said above, anything that happens in between here, what is this point right here? What is this point and what is this point? Okay. Okay. Market structure. Perfect. So now we've identified this. What is this? What is this point right here? We'll call this point 1. Okay, higher high. All right, cool, 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 cool. So what goes to the higher high? Do we move this here? Do we move it here? Move up. All right, fair enough. So we're going to move this up to this point right here. So now this point right here is now the higher high. And where does this go? Does this go from point 1, point 2, or 3? 1, 2, or 3? Oh, I got some of you guys, bro. I got some of you guys. If this just created a higher high, how is there a point 3? Point 3 is like not even there yet. Oh, trust me, I'm gonna hit you with tricks like this for the next 30 days, bro. Like you guys are about to trip out. Like these tricks will get to you. So there's no 3 because obviously it hasn't happened yet. And as you can see, obviously, and like once I show you guys the example, like you're gonna be so like dumbfounded by how simple you're gonna read the charts, right? Because if we have a higher high, obviously you would expect a higher low, previous market structure, to go to the upside. If you just see it, it literally has the pullback, market structure, heads to the upside, right? But a lot of these examples you guys are gonna see now in obviously the next coming days. So it would be 0.2 because 0.3 hasn't happened yet, right? So we're gonna move this to point. Let's make this like this to the bodies, like always. Make this the higher low. So now that we've created now, obviously this happened here, and then now we have a higher high. We'll move this up to the higher high. Fire, okay. So where does the higher low go to? Does the higher low go to 1 or does it go to 2? This could be a little tricky. This is gonna get tricky, trust me. 1 or 2? See, I see some of you guys messing up. All right, fire. So if you notice, we did get the higher high, right? So let's take it back a step. Let's take it back. So we know this is the higher high, right? So let's do this. Notice, all right, watch. So we do this, whatever. And we create the higher high, boom. So now what I'm asking you guys is what is the higher low? So this is why I'm saying you got to clean up your charts. Like, let's just get this out the way for now. What is the next higher low? Is the higher low 0.1 or is it 0.2? And this goes back to the principle, an elbow. Which one is the elbow? Is this the elbow or is this one? Obviously, you just bring out your trusty arrow and then this is what you're going to mark up the elbow to. You're not going to mark up this as an elbow. So this is, boom, higher low would be to this body right here. Because if you go to the line chart, you can be tricked very easily to this because this does look like an elbow, but we're not trading based off of the line chart. We're trading off of the candlesticks. Candlesticks, that is not an elbow. So this is why I tell you guys stick to the candles. I just have this up like preset question because I get this question asked a lot. So I'm like, let's just say it from the get-go and get it out the way. When you're identifying it, this elbow looks clean. But if you would have gone over to the line chart, it would have told you this was the last like elbow before the higher high. But when you go over the candlesticks, you're like, wait, like it doesn't look that clean. So you guys are seeing that example there, how it could be very tricky, very confusing. Okay, cool. So let's delete all of this. All right, cool. So we've identified our higher high. We identified our higher high, higher low, higher high. So what is this point right here? Market structure. Yo, you guys are fast with the replies. You guys have like preset replies. Like you guys are fast. Okay. What is this point right here? As of right now, what is this point right here? Okay. Okay. What is this? Okay. Yeah. Okay. Nasio got it. Okay. Lower low. All right. Bet. So we're going to move this here. We're going to have lower low. And where does the lower high go to? Does the lower high go to point 1, 2, or 3? 2. Okay. Because if you look at the line chart, it would tell you it's this point right here, because that looks like an elbow. But when you go over to the candles, there's nothing. There's literally absolutely nothing. So you would go to here, mark the sub as your lower high, so on and so forth. You guys are getting it so far. I can continue with the examples throughout across this, or I could jump straight to where we are. What do you guys think? Should I jump to where we are, or should I keep it going? Jump. All right, fire. It's going to be a lot easier. All right, cool. All right, so you guys understand it. Now I feel like a game. All right, now I want to ask you guys, like, did you guys ever see the markets like this before? Was it like this simple? Like, was it this easy to like identify where we are? Like, I want to know, because I've no. Okay. Hell no. Bro, you're making it insanely easy. I will get confused. Yeah, this is very simple. And I'm telling you guys, like, the way that I'm gonna like bring this like information to you guys is gonna be so easy. Like this right now, what I'm teaching you guys took me 3 weeks with the first boot camp. Like I was like frustrated. I was about to just like not do this ever again. But obviously, you know, it took me some time to like get to understand how to tell it to you guys. You're getting me gassed. Yeah, running. All right, perfect. Yeah, bro. Like Duchess just said it. We were so confused. But like now the way that I mean, so Duchess, like, is it a lot simpler? Is it like cleaner, right? It's a lot better. It was so difficult for me to explain this at the beginning. Much more. All right, fire. So based off of here, let's identify. So I want you guys to tell me, where is the higher high? Where's the higher high? And then where is but I like, yeah, no, of course. And then where is the higher low, right? So let's start off with the higher high. Is the higher high at 0.1 or is it at 0.2? Okay, 1. Now, the higher low, would the higher low be at 0.1 or at 0.2? 1. Okay, fire. So let me just show you guys again why we don't go on the line chart. As you can tell, well, actually, there's really nothing here on the line chart. So we'll just go back to the candlesticks. So we'll start off with basics. To go long, do we buy once the candle breaks the higher high? No, Elijah. We will literally buy exactly where we are right now. But that is like the last thing. Like I saw a lot of you guys had a lot of questions and a lot of concerns with entry signals. The entry signals is like the last thing. It's literally like week 4 and it's just one thing. Like if you guys notice, let me go back over here. Again, I'll click on like any one of these things. Like the entry signal is the last confluences. So far, I am still here and I'm going to be here for like the next week. Then after, we'll get to everything else that I did not even have here at this point, which I've been learning as I go. But yeah, entry signal is the last thing. Like entry signal is like not even a concern right now. Looking like the last candlestick might go bearish. We'll get into that in a little bit, right? So right now, what we're going to do is just where are we? Where are we? Are we in the middle? Are we in the top? So confluence to go long. First things first, weekly is bullish, right? Next would be the daily time frame, because obviously we're identify where all the other time frames are. So now these structure points are irrelevant because they were only relevant for the weekly. So where do we mark off? See, look, this is where it starts getting tricky. I love it. All right, where do we mark off the higher high, right? So again, I'm only moving into where we are right now, simply because I feel like you guys understand it. But ideally, like I was supposed to start from here, right? But I'm going to move into where we are right now, which is obviously here, because as you can see, we're obviously heading to the upside. So I'm just going to move in right into those zones. So are we at a, where would we mark off our higher high? Would it be 0.1 or would it be 0.2? I see my boy Fari. He's looking in close. All right. Can you zoom in more? Yeah, of course. Okay. So would you mark off 0.1 or 0.2? Which one would you mark off as the higher high? Would it be 0.1 or would it be 0.2? For sure, 0.1. All right, perfect. So this is a perfect, yeah, so it would definitely be 0.1 because if you can tell here, price never broke above the previous bodies. We're going based off of the bodies. And if you know, you go out to the line chart, you can see it didn't break above. It was just like, it literally did like a little structure move. So this is the higher high. This is why I don't use the wicks, because the wicks can be deceiving. We want to go based off of the bodies. So where would we place our higher low, right? Would we place our higher low? This is where it gets tricky, very tricky. And this is why like it's going to go based off of like some things that I teach in the next upcoming classes. Would it be based off of 0.1, 2, or 3? 1, 2, or 3? This one's tricky, like extremely. Okay. Okay, cool. So you guys are right. Ideally, this one, let me just make this perfect. Ideally, the one you would want to identify would be 0.1. Would be this point right here. Maybe in the future, you know, you can maybe identify this as an elbow, because obviously when you go down to the 4 hour, it's like we actually took these buys. Like this is a beautiful buy, break and retest round psychological, retest 4 hour EMA, 4 hour bullish engulfing. Like this is a perfect elbow on the 4 hour. But when you go out to the daily, there's nothing. But you know, we'll get into that in the next upcoming classes. So yes, this would be elbow 1, and then this would be 2. So what is this point right here? Is this a higher low? This is a lower high? What is this structure point right here? Market structure. All right, perfect. So we identified that the daily is bullish. Because if you were to look at it like this, maybe you could have seen it as bearish if you would have marked these elbows up the wrong way. So you could have, you know, kind of messed it up, right? So we know that we're obviously bullish on the daily. What is a round psychological? So if you notice, round psychological is basically where we've rejected from, but round psychological is something that we'll get into maybe like week 3, or maybe like week 2.5, kind of like around there, because it's gonna go in with support and resistance. Guys, support and resistance, same thing as supply and demand. It's just literally worded to you in like a, they're making this new thing to like, I guess, sell more or whatever, but it's the same shit. Supply and demand, support and resistance, it's all the same thing. So we'll go here, daily. Daily is bullish, right? So now we'll go down to the 4 hour. Now in the 4 hour, before I explained to you guys, before we had our trusty horizontal lines, I explained to you guys how we were bearish, but it could have probably looked a little confusing on why we were bearish, because it looks like we're obviously bullish, right? Like this would look like a perfect area to buy, right? Because, you know, it looks like we're creating higher highs and higher lows. But if you zoom into the market structure, you could see how we could have gone bearish. But I want you guys to identify it before I did. I should have not told you guys we were bearish. Fucked up. But whatever. I'll get you guys in a little bit. I'm gonna trick you guys again. So I want you guys to identify to me the market structure from this point forward, right? So from here forward. So let's start off from here. So let's make this the higher high. If this is the higher high, what is the higher low? Is the higher low 0.1 or 2? A couple of you guys already messed up. 2 didn't exist. Yo, it's kind of crazy because if we just made a higher high, how did you see 0.2? You haven't seen 0.2 yet, right? So tricked you guys. So this would be the higher low at this point right here, this market structure point. So then obviously we have this higher high. Would you identify, where would you identify the higher low? 0.1 or 0.2? 1. Almost got you. Yeah. All right. So 1. Would you consider this a higher high and a higher low or no? Okay. Yes, no, yes, no, yes, no, yes, no, yes, no. Okay. Mixed feelings. I personally myself, I would, simply because the elbow, if you notice, where was it created? At the previous market structure. So this is going to go in line with a little bit of the next upcoming weeks when we get into support and resistance. Notice the difference between this right here and then this right here. Notice the difference. Notice how this elbow happened at a level of resistance being used as support. And notice how this one just happened nowhere. Like there's like literally nothing. Like it retested right the previous structure point. I'm going to leave because it's 1 a.m. Yeah, go ahead, Duchess. Thank you for being here. Appreciate you. See you. Yeah, guys, Duchess is all the way. She's across the pond. So yeah, I know it's late over there. So yeah, so this right here is not the same as this one. You guys see the difference between the market moves? Bro, I've never seen the market this way. Yeah. I mean, it's only getting started. Trust me, we got a lot more. So yes, okay. So I would still consider this to be the level of higher high, higher high, and then higher low, right? So then we have our next higher high, right? And this is very important because this will literally determine whether a trade goes bullish or bearish. So then we have a higher high. Again, everything that happens in between these points is simply market structure. All of this is simply nothing. Look how close we got to this point. And then what happened? Nothing. Nothing. It didn't go bearish, because if this would have been like this, let's say this structure point was like this or whatever, and then this body closed under, I could have guaranteed you it would have came back, did a lower high, and then went to the downside. But since we did not body close under the structure point, we remained bullish, came back. As you can see, we did not body close above our resistance, meaning it did not create a higher high. If it would have created a higher high, would have had a higher low, went to the upside. And this is why I'm going to go back to this example. If you notice here, price body closed above the resistance, came back, retested, and then went. You're seeing how significant a body closure above, come back, retest, and then go. As you can see here, none of these body closed above, nothing happened. It stayed within the range. The moment we body closed under, you see how it goes. Are you guys seeing these things? Is it trippy? Because when I learned this shit, it was trippy, man. I was like, what the hell? Are you guys seeing it clear? You want me to take it back a few steps? Again, I'm here for you guys, so I'm going at your guys' speed. I'm just kind of going right now with the flow. It even retested. Yeah, it even retested. Repeat it again. Fire. Not clear. All right, cool. All right, we'll do it again. So let's do this then. All right. So we've identified here, price has created a higher low and price has created a higher high, right? We understand this? We all got this? Can I get one of these? No. All right. Perfect. So the moment everything, what is this point right here? Market structure, nothing. Perfect. Okay. What is that? Nice. All right. It's a higher high. All right. So that's a higher high. Where does the higher low go to? Does the higher low stay here because it's not that big, or does it move? It moves up, right? All right. All right. Remember, as of right now, you're just trading what you're seeing. And what you're seeing right now is a body closure above the previous point, making this the higher low. All right. This is still moving up to the upside. For as of right now, in order to have a higher high, you need a higher low before. Yes, sir. So as of right now, you don't know if this is gonna do this or if it's gonna do this. You have no idea. I like literally like neither do I. So what do? Is we just trade what we see. As of right now, this is what we're seeing. What is this? Nothing. Nothing. Market structure, right? Nothing. There's nothing going on as of right now. All right, cool. What is this? There you go. All right, gangster. Higher high. Does this stay here or does this move? Okay, fire. So now this is gonna move as a higher low. So when we move as a higher low, we keep it going. We keep the same rhythm going. So this keeps moving. This keeps moving. So now this is the higher high. What is this as of right now? Market structure. What is this as of right now? Market structure. Oh, what about now? Market structure. You see the importance of the body closure under. It's so important. And you guys are going to see it like when we like do it live within the markets. So nothing. All right. Okay. Oh shit. What about now? Nothing. All right. Well, clearly it was nothing because it did nothing. So what about now? Nothing. This is why we don't trade impulsively. We need to wait for that candlestick to close. We would have traded that impulse, that candlestick hadn't closed, we would have gotten stopped out. Just an example, right? Same exact thing here. Did not close above, was not a valid reason to take the buy. You guys are seeing how it didn't close above, it did nothing. The moment this closed above, you're seeing how it went. You guys are seeing the importance of setting up these horizontal lines, right? This is why I'm saying it's mandatory. Like you got to set them up. The moment we body closed under, like that right there counts. I swear to God. That right there is a body closure under. The moment we close under, gone. But you're seeing the difference of the body closure above or under these zones, right? This is why when I had a GJ marked up for a bit, like I had this marked up for a minute. I had the moment we don't close above the zone, the moment we don't close under the zone, we simply don't do nothing. We caught little minor sells here and there, but it was because we didn't close above or under. So as of right now on the 4 hour, hold on, before I keep going, did you guys get it now? You guys kind of saw it happen like live? You guys saw like the difference? The persons that had the concerns before, because I saw a lot of yeses, I saw a little bit of no's. The like, did it kind of get cleared up now? Okay, fire. Yeah, but that wick would have been a retest on the. Yeah, of course. Yeah, 100%. Okay, cool. So what would we mark up as this point? What would be this point? All right. All right. Lower low. And then what would this point be? Oh, okay. Now we got a lot of different answers. Ah, nothing. The correct answer is nothing. this would be the lower high at this point right here. Ah, bro, I'm telling you, I'm gonna keep hitting you guys with these shits, bro. It's only day one. Like, all right, so we are obviously bearish on the 4 hour. The ideal thing and the trade setup that I'm going to teach you guys how to trade is to have all of these in sync. There's a little trick on how to do it, but as of right now, this is bearish, right? So now we know where we are. We know the weekly is bullish, we know the daily is bullish, and we know the 4 hour is bullish. So in order for us to go with the trend, we would need the 4 hour to go bullish. There's two plays that can happen. Two things that can happen is first things first. First thing, we break above this structure point. Now the 4 hour is bullish. So now we would look for any higher lows to buy. Or we can create a lower low, something very small, just a body closure under. This would move to the lower low. And then this would move as the lower high. And then we would wait for the break above this one. And then we would wait for the higher low. And then we take the trade long. Those are two possible scenarios to make the 4 hour go bullish. Did you guys get that? Was that clear? Very clear. Now I see. Wait for the elbow. Correct. So fucking clear. Fire. Mind blown. Yes. So this is what I'm telling you guys. I'm literally telling the market what to do. If the market doesn't do what I tell it, I don't take the trade because it's clearly not going by my trading rules, right? So as of right now, we have these 3 time frames in sync. I mean, not in sync. We have these 2 time frames in sync. This one is bearish, right? And that's where I'm going to stop today with this. I'm not going to keep it going. I'm not going to do nothing. I'm just going to simply stop here. So now, where are we on the weekly on GBP CHF? So now I want you guys to tell. Because we just, it's very easy to identify USD CAD, right? But now, all right, where are we here? I want you guys to tell. That's where it gets fun. Are we bullish or are we bearish? Not like are we higher high? Are we higher low? Are we lower high? Are we lower low? Like what? All right, everybody. Okay, let's see. Everybody's saying bearish. So let's find out. We have. This is the higher high. What is that? That's the body closure above. You guys seen it? I see a lot of bullish, bearish, bullish, bearish. All right. So now, when we had this was obviously in a bearish play to the downside. So we had lower low, lower high, lower low, lower high, whatever, lower low, higher high. You see how we went bullish, right? You see how we broke above this structure point? We went bullish. This is insane. Okay. You guys are seeing it, right? Okay. So the moment we body close above this, we go bullish. Or the moment we body close under this, we go bearish. So we'll zoom in. That is not a body closure above. That is not a body closure above. Not a body closure above. Like this is where it gets to people. Oh shit. There it is. You guys are seeing that body closure above. So now we move this to this higher high structure point. You guys are seeing that, right? You guys see that clearly? So since it's such a small move, would this just stay here or does this move? Would this go to point 1, 2, or 3? Exactly. It would be point 3. We cannot have a higher high without a higher low. If price created a higher high above this point, there was something that pushed it above, and that is the previous higher low. So now again, anything in between these two zones are structured, because easily from here, we can have created this pullback and gone to the upside, like easily. This is very easy possibility, right? But let's see what happens. So right now, nothing. Like, are you seeing that? Are you seeing how this whole entire candlestick managed to stay in between the higher high and the higher low? You're seeing how we did not manage to body close under that. Like, are you guys seeing this? Like, this is insane, right? So what happens here? Body closure under. So now this automatically turns into what? Okay, exactly. Lower high. And then now this gets moved to a lower low. This now gets moved to a lower low. So this is obviously going to go to wherever it decides to go. So let's identify. So as of right now, this is the lower low point. As of right now, this is the lower low point. Anything that happens in between these two zones, it is bearish. Notice how it does not close above, just pure wicks. Boom. Another lower low. Are you guys seeing how it went from creating beautiful bullish market to then the moment we body close under, we then create a lower high to then go to the downside? You guys are seeing just by placing these lines, the moment a body closes under, it now shifts to bearish, creates a lower high, and then it sells. You guys are seeing like are you guys seeing this? Like, this is just like looking back at it now, it just like drives me crazy. But like, it's just so simple by placing these simple lower high and lower low nines. It's literally just market structure. Mind blowing, wild. Okay, so now we identify this as a lower low. We identify this as a lower high, right? You guys are with me so far? Simple. All right, lit. So we keep it going. We body close under the lower low. We keep it going. Whatever. So again, this is now the lower low. You notice how this is the lower low, right? You usually don't have these lines on your chart. Is it more mental note for you now? Yes. So kind of like how I was explaining to you guys at the beginning, like I know how to drive already, so I don't have to get into my car, adjust my mirrors. Like my car already has the preset settings, so I just get in and drive. But the first thing when they teach you when you go get your license, or at least what they taught me, is like whenever you get into the car, you make sure your mirrors are good, your lights are good, whatever. When I get into my car, it's just my settings are already there. So yes, I don't have to do the lines because I already know where the market is. I think that was like a dope analogy, right? That was a pretty simple analogy. So you guys understand now how this is a lower high, this is a lower low. You guys are seeing that, right? It's very clear, simple. All right, let's keep it going. Keep it going. All right, what the hell is this? Is this a lower high, or this is a lower high, lower low? Market structure. We haven't broken above or anything in between this. So this is where we are right now. We're in the middle of the move, but that's not where we are today. Today, where we are is to go short. So 1 weekly bearish, right? You guys are seeing that weekly's bearish. Before it looked bullish or it looked choppy, but now we know that the market structure is bearish. Forget about it if it's choppy, because trust me, this is choppy as shit. This is 77 days in the same spot, but you need to understand that we are overall bearish, right? So this is where we go out to the daily time frame, the daily time frame, we do the same thing. Let's see if any of you guys could just spot it without even noticing. Are we bullish or bearish? Bearish. Very easy to identify. But again, I got to teach you guys. Can't thug on me out just yet. You guys got to put on your seatbelt when you drive. So when you come in, throw your lines up. This is your lower low. And this is, oh, let's see. Where's your lower high? Let's see. Bro, it's funny seeing all you guys smirk, bro, because it's like, it just makes me laugh. Imagine just seeing like 25 faces. Just like, it's funny. Because it's tricky. It gets tricky, right? All right, so let's see. Is the lower high at points? All right, we got the boy Jeremy. Jeremy's on the money. We got 0.1, 0.2, or 0.3. That's tricky. Seeing a lot of mess ups. Okay. Literally, there's a lot of everything. It's a full mix. I would identify this at 0.2 due to the fact that this is the clean elbow. If you notice, let me take this off. Notice how we have higher high, market structure, elbow, and this is just the move down. This doesn't really count as an elbow. It's just the move down that breaks the higher low. You guys are seeing it, right? You guys are seeing how it's not this point. That's for sure. Where it gets confusing is whether it's this one or this one. It cannot be number one because there's another structure point before it. Kind of when I was showing you guys the example of like this. This is literally this example right now. And I ask you guys, is it 0.1 or 0.2? You guys are saying 1. It has to be the last structure point, the last elbow point, which was this one, right? Let me make that to the body. So we're bearish on the daily, right? Gangster. Bearish daily. All we're doing right now is just properly understanding market structure. Notice, like, as of right now, we are just getting this. Like, still, we got a lot to go. We'll go to the 4 hour. 4 hour, where are we on the 4 hour? Are we bullish or are we bearish? My bad, I'm making this kind of hard. Are we bullish or are we bearish? Okay, fair enough. Where is the lower high? Is the lower, obviously, is the lower high? I'm saying lower high because you guys said that it's bearish, right? So where is the lower high? Is the lower high at 0.1, 0.2, or 3? 1, 2, or 3? Seeing a lot of mess ups. All right, back to the prince. Fuck. Had a brain fart there. Back to the fuck, bro. I be forgetting some words sometimes. Bro, there's a lot of talking. Give me a second. Back to the principle. This is not an elbow. It's just the move. This is not an elbow. It's just the move. So this is where I got you guys. It can't be 3. It's not an elbow. It's thrown on the line chart. It does look like an elbow on the line chart, but look at the bodies. Like, you can't identify one of these there. Not even here. This is not an elbow. You could even identify maybe this is a clean elbow. This is a clean elbow. You see the fact how it's boom, an elbow. There's no boom. There's none of that. Maybe on the 1 hour, but as of right now on the 4 hour, there's nothing, right? So it would be, this is the last elbow point. Because if you notice, before it did the lower low, look at this, look at it like this. We had to move up. It's the last elbow before we headed to the downside. And then every point after that, just not an elbow. It's literally just one candlestick. And notice these retracements does not consist of one candlesticks. It's 2-3 candlesticks of slowing down and then the push. You guys are seeing that, right? Exactly, yeah. So this would be the lower high, and then this would be the lower low. So as of right now, we are bearish on all time frames, making this, creating this a solid foundation of a 30%. So this for me, I move to the top of my chart and I make it number one because it has 3 time frames in sync. So obviously after identifying all of these, after breaking down all of these charts, I then squeeze it down and I'll mark these up. And then from my top 5, then I'll do 1, 2, 3, 4, whichever ones look best. This one as of right now is 1 because this one's 30%. As of right now, this one is 20%. 20%. You guys are seeing this, right? Is it all making sense? Perfect. All right. So we've been on for a minute. All right. So let's keep it going. So let's keep it going on all these other time frames, just so we understand the importance of the organization, and then we'll get on tomorrow on our next call. Cheat codes. All we're doing right now is just like identifying where we are. Are we bullish or are we bearish? We're not doing anything yet. Like that's like I'm just properly educating you guys on how to identify it. Like I've never seen anybody do it like this. Everybody kind of just gets on and just say, yeah, we're going up or we're going down. But there's not like facts. Like, bro, it's a fact. Like if this is the higher low, the moment we body close under, bro, we're now bearish. Like it's a fact. Like this is a perfect example right here. The moment we body close above, like we are now bullish. That is a fact. Like these are all factual things that the market literally shows you that I collected over time, right? So same thing here, Euro GBP, weekly time frame. Are we bullish or are we bearish? Can you guys see it from this far? Can you guys identify it from this far? Now it's pretty hard to identify from this far, right? So you got to get in, you got to zoom in. What are we? Are we bullish or are we bearish? Take these, John. Bullish, all right, dope. So obviously we have our higher high. Where's our higher low? Is our higher low at 0.1 or at 0.2? All right, you guys are on the money. Let's keep it going. So we know we are. Weekly's bullish. Daily. Are we bullish or are we bearish on the daily? Bullish. All right, dope, dope. Mandatory lines. Higher high. And this is just like many things with this. It's going to be repetition and experience. Higher low. You guys are seeing it, right? Higher high, higher low. Cool. Simple. Does your bias to go long or short depend on the weekly to begin with? Yes, Max. But that we'll get into that tomorrow, next week. Like we're good on that. But it's a great question and it's very valid. But we'll I got you. We'll get to it. Okay, so we're bullish on the daily. Bullish daily. Cuando lo hice revés, bro. Daily bullish. All right. So now we go down to the 4 hour. All right, boys. Are we bullish or are we bearish? Oh, word. We got, are we bullish or are we bearish? Could get confusing. Oh, yeah. Very confusing. There you go. Bunch of mixed answers, right? So this is why we got to bring out our trusty lines. So let's mark this up. Higher high. We'll mark this higher low. Right? So we'll start off with the points right here that we know. Higher low. higher high, we did a higher high. This is the higher low. Again, the moment we body close under, look at the perfect retest to head to the downside, but that doesn't matter right now. What matters is just the moment we body close under, making this the lower low, and then making this the lower high. Again, the moment we body closed above makes this the higher high. So now this would be the higher low, right? Notice price here came to this higher high. And then what did we do here? We came back, retested the previous structure point, creating a higher low, body closing above this structure point, making this a higher high. If that's the higher high, then this is now the higher low. So you can tell we've broken under. We're having now the retest to have the short to this level here. You guys see how that could get super tricky? Do you guys see how like it gets cleared up? You guys see how it's very, very, very simple to clear it up just by these simple lines, right? Bro, this is incredible. You can't make this shit up yet, bro. Yeah, when I do that in those videos, bro, people laugh. I don't know why. It's like, I'm not making this up. The same thing I teach you guys is I'm just repeating it, just in a different example. So, yeah, man, breakdown. Yeah, it's very simple. So now, same exact way as right here, how we went temporarily bearish. Notice, all right, let me just do this. And, we went here, and then this is our higher high. Notice out here how we went temporarily bearish, how we body closed under, had a little quick retest to go lower low. There's a reason behind this, right? And I'm just not going to get into now. Like we'll get into that tomorrow. It's the same reason what's going on now. Like this is going bearish for a reason. It's so it has like the pullback for the daily. Like the daily's got to come back to this level to go long. But that doesn't matter right now. What matters right now is that the 4 hour is bearish. So this is, as of right now, a 20%. So this one will be there too. We'll kind of go through these quick here. NZD CAD, obviously weekly. Weekly is bearish, as you can tell. Very simple to identify. We have a lower low, right? We go out to the daily. Daily, are we bullish or are we bearish? Bearish, very simple, very simple. Okay, daily's bearish. And now we'll go to the 4 hour. Are we bullish or are we bearish? Dope. Every single Johnny, man, fucked it up. Jeremy, fuck now, okay. It's bullish. As you can tell, very simple. We'll bring out our trusty lines. We have lower high, and then we have lower low, right? We have lower high at this point, then we have lower low. So this moves as the lower high. Boom. We are now bullish on the 4 hour. Do you remark up your charts every Sunday or Monday like the guy does that? Yeah. So yeah, but I just do it visually. Like I just do it fast because like I know, like it's, trust me, it's gonna like seem the same thing. Like let's say right now let's say work at a body shop. You come in and to change some tires, like you gotta unplug it, take out the air, remove the rim. Like it's just the same thing, just different day. It's gonna be the same thing with this. It's gonna turn to the point where it's just same thing, different day, right? So here we have 4 hour bullish. So this would be 20%. And again, like when you guys identify your own charts, you're literally going to answer your own question. Like, oh, how do I know if I'm right? Throw up the lines. The lines tell you it's bullish or bearish. Like you're going to answer your own question. So now we'll go over to GJ, and GJ, why is it? because it body closed through the line, right? So GJ monthly. So we have, let's take off the monthly for this example. So we obviously have bullish, bullish, bullish. Daily is bullish. 4 hour is technically still bullish, because if you notice, this is the higher low, higher high. We haven't body closed above that, and we haven't body closed under. So all of this is bullish. So this would be a 30%. So technically right now, based off of what you're seeing, this is supposed to be second, but ideally it's not. And it'll make a little bit more sense later, because like it'll just make more sense later. But as of right now, this is what I want to teach to today. So we all have the same speed. You know, I want you guys to come back, watch this recording, and understand everything, right? So let me stop the recording here.